Welcome back. Let's talk about the lever that's really moving markets right now. Oil. Brent crude is approaching $82, up more than $10 since Friday. That's a 14-month high. U.S. crude is pushing roughly $75.55, an 8-month high. This surge accelerated between March 1st and today, March 3rd, as the conflict escalated over the weekend. This is not speculation. This is supply fear. So, why does oil matter so much? The Strait of Hormuz handles roughly 20 million barrels per day. That's about 20% of global oil flow. If that corridor closes, even partially, energy shock, shipping shock, inflation shock, and liquidity shock. That's the chain reaction. Who's driving this, you ask? OPEC nations, U.S. and Iranian militaries, Saudi Arabia and UAE infrastructure risk, global energy traders, speculators positioning for disruption. And remember, explosions were reported in Dubai. That adds real, not theoretical, supply concern. Markets are pricing potential disruption now. Now, why does this pressure crypto? Well, oil spikes tighten financial conditions. Higher energy costs mean higher inflation expectations, fewer rate cuts, higher capital costs, lower liquidity. Crypto trades as a liquidity asset, not a bunker asset. Bitcoin dipped below $66,000 earlier. That happened during peak oil acceleration headlines. Funding rates printed as low as negative 6% at one point. That tells us something important. Traders are aggressively shorting, which means short squeeze potential exists. But it also means bearish conviction is real. When oil rises sharply in a geopolitical shock, central banks hesitate, risk compresses, high beta assets bleed. That includes crypto, at least in the short term. So, what happens next? If Hormuz closes, oil to $100 plus is realistic. That likely pushes BTC toward the low $60,000, maybe even high $50,000 if panic spreads. If the U.S. releases reserves or de-escalation talks begin, oil cools, shorts unwind, crypto squeezes hard. Energy is the throttle right now, and until oil stabilizes, crypto remains in defensive posture. This isn't about chart patterns. This is about barrels per day, and right now, the barrel is winning.